Hey there, here's our 2.4a notes on deductions and net pay, and they might be a little bit long, so I apologize for that. So deductions are the amount of money that's taken off your gross pay for income tax, so federal and provincial or territorial income tax. So when you make money, you have to give the government some of that money. Union dues, disability insurance, employment insurance, otherwise known as EI, pension plans, including CPP or Canada Pension Plan, and then health benefits or other benefits. Income tax, CPP, and EI is paid on your taxable income, and we're going to talk about what each of these terms mean. So each paycheck should list what your gross pay is, all the deductions you have to pay, and what your net income is. At the end of the year, your employer will supply you with a T4 slip that you use to prepare your income tax return. So gross pay is the amount of money earned before deductions. So it looks like you make that much money, but you don't actually get to take home that much money ever. So you will have things deducted off of there. Your taxable income is income that you pay federal and provincial tax on. You calculate it by removing before tax deductions like union dues and company pension from your gross pay. So you don't get taxed on all of the money that it looks like you make. You don't get taxed on your gross pay. You actually get to take some money off of that and then tax kind of the remainder. So you end up having to get taxed on a little bit less. So less money. So that's nice, except it provides another step that we have to do when we do calculations. Shucks. Okay. Benefits are programs you and or your employer pay for. So usually you'll pay a portion, your employer will pay a portion. That will benefit you as an employee. So some examples are pension, healthcare plans, long-term disability insurance, dental plans, union dues, if you're part of a union, life insurance, savings plans, stuff like that. Your net income is the amount of money that you make after taxes and all your deductions have been taken off. So that's actually what you get to take home. So your take-home pay is your net income. So you don't get to take home all of the money that you technically make. The government takes some. Other organizations will end up taking some that do benefit you, and you get to take home the remainder. So before tax deductions, this is how we calculate before tax deductions. We take our gross income and we multiply it by whatever percentage that deduction is, and we get our money. So just as we've been doing already. So we take a dollar amount and we multiply it by a percent that we have turned into a decimal to get how much money that contribution will be. So before tax deductions include things like pension plans, your health care plan, long-term disability, everything we mentioned before, also charitable donations. So when you donate to charity, if you get a receipt, you can actually claim that on your income tax. When you do your income tax every year, usually due in April, you can get some money off for giving to charity. So let's take a look. Your group life insurance is 1.5% of your salary of $450 every 2 weeks. So how much do you pay for group life insurance? It'll be 1.5% of your $450 salary. So money times our percent turned into a decimal. So remember, turning my percent to a decimal, divide by 100, and I get 0.015, not 0.15. That's 15%. That'd be way too much that you're paying to life insurance, okay? So 0.015, so 450 times 0.015 equals 675. So you pay 675 to life insurance every 2 weeks or every paycheck. That's how often you get paid. Okay, so remember, dollar amount multiplied by your percentage is a decimal. So if your disability insurance rate is 0.5%, what do you contribute if your gross income is $400? So same thing, money divided by your percent is a decimal. Now here's the problem, it already looks like a decimal. This one would be kind of tricky, but remember, you still divide by 100. So this is 0.005. Okay, so that's this percentage as a decimal. So times 0.005 equals exactly $2. Okay, so you contribute $2 of your gross income. So $2 of your money goes to your disability insurance. If you make $400 here, and if that is your rate. All right, so you have a gross income of $785. Your net income was $625.42. What percentage of your gross pay were deductions? So this is how much you make, gross income. Your net income is this. What percentage of your gross pay were deductions? So we're looking for a percentage for deductions. Okay, so how we can find percent deductions is it'll just be whatever we pay for deductions divided by our gross income times 100 to turn it into a percent. Now, we can find out how much deductions we have to pay by taking our gross income, subtracting our net income, which is why I have this full formula here for you. But this top bit is just how much money it is for deductions. Okay, so gross income, $785, minus our net income, which is $625. So here's how much it looks like we make. Here's how much we actually get home. So our deductions will be the difference between the two. So gross income minus net income. And divided by the total amount of money, so the larger amount, so $785. And then times 100. So $785 minus $670 or $625.42, we get $159.58 divided by 785 times 100. Now this number here, that's how much we paid in deductions. Okay, so of the $785 that we made, $159.58 of them went to deductions. What percentage is that? Let's just do our calculation, and we get 20.328, so on and so forth, percent. And for percentage questions, just round to the nearest tenth, so 20.3. So 20.3% of your paycheck went to deductions. So you got to keep about 80% of your money, and everybody else got about 20%. Keeping in mind that it does benefit you, which we will talk about. Okay, so your taxable income is income that you pay federal and provincial tax on after you've done your before tax deductions, like your union dues and company pensions. So you subtract your before tax deductions and then from your gross income, and that's your taxable income. So that's the income that you will get taxed on. So it will be less than your gross income, so you end up paying less money to taxes. So it is good. So we have to calculate our taxable income first. So we have to remove those before tax deductions. So things that use your taxable income are your federal tax, your provincial tax, your employment insurance, and your Canada pension plan. All need to use that taxable income, not your gross income. So instead of doing gross income times your percentage as a decimal, you take your taxable income, multiply that by your percentage as a decimal. So same thing, we have taxable income as money times our percent as a decimal to get our answer. So calculate the amount deducted from a taxable income of $653. So our taxable income is $653. So first step's done for you, finding your taxable income. You're not given your gross income, so it's just money divided by percentage as a decimal. So this percentage as a decimal for federal tax is 0.18. So 653 times 0.18, and we get 117.54. in federal tax. Okay, provincial tax, 13%, so turn it to a decimal, 0.13. And our taxable income is 653 times 0.13. And we get 84.89. For our provincial tax. And 5.6% for EI will be 0.056, so divide by 100. And we take our taxable income, 653 times 0.056. And we end up getting 36.57. Well, we have 36.568, but I'm not going to pay 0.8 of a cent. So round off to 2 decimal places. We have to do our context rounding because we are dealing with money. So cutting it off after the 6, take a peek over, we do have to round that 6 up to a 7. So 36.57 in EI. Okay, so once again, money divided by percentage is a decimal, but this time not our gross income, our taxable income. So very, very important. Taxable income, not gross income. Okay, we were talking about things that you can take off before you calculate your taxable income. So in Saskatchewan, these are our income tax rates. Okay, so for the first $45,000, $45,225 that you make, you'll have to pay 10.5% of that to income tax for provincial income tax. On the next $83,989, you'll pay 12.5% on that, and then a little bit more on if you make more than that amount of money. And you do get tax credits. So there is a basic personal amount that you get. So if you make less than $16,000, you won't really have to pay provincial income tax. Then you get some credits based on kind of like what your family does. Do you have a dependent child? Are you a senior? Do you have a disability? So you can get a disability supplement or a caregiver amount if you need a caretaker. If you have to take care of something, you can deduct some money off of that. Charitable gifts, remember we talked about charity contributions, and once if you donate extra money to CPP, you get that off. Student loans, so this will be pertinent to you guys in a few years, possibly. If you have student loans, you can deduct that off, and so you won't get taxed on money that you've had to pay towards student loans. And there's a bunch of other stuff, guys. So, and also for federal taxes, there are things that you can claim off of that, and so you don't have to pay that entire amount. But once you start going and doing your own income tax or getting somebody else to do your income tax, like an accountant, you don't have to worry about that yet. Okay. If you go to this website, you can see a Saskatchewan income tax calculator. So if you make this much money, how much tax will you end up having to pay? All right. So in Saskatchewan, if you make, for example, median wage, that's pretty low. So if you make $42,000, you'll be paying about $17,000 in taxes. So federal and, or no, if you make $60,000, you'll pay $17,000 in taxes. So you'll take home $42,000. So you basically lose about a third. Okay, not quite, but almost, of your money to taxes, not just all your deductions, just to taxes. Okay, if your gross pay is $100,000, you will get taxed $32,000 and go home with $67,000. So you making $100,000 sounds really good, and it is really good for most people, but you do get taxed on that. Okay, so you will only be taking home $67,000. Okay. Where do those taxes go to? So they get used to pay for a lot of different services that the province or the country provides. So things like libraries, parks and playgrounds, arenas, swimming pools, roads and bridges. Every time you complain about a road and it ends up getting fixed, that's your tax dollars at work. If it doesn't get fixed, sorry, your tax dollars will be hopefully at work soon. Education in schools, healthcare and hospitals, police, ambulance, fire services, garbage, recycling, economic developments, wildlife conservation, national defense, things like old age security, which doesn't affect you now, but it will affect you later, so really important. Employment insurance, Canada Child Benefit, social assistance, a bunch of stuff. So your tax dollars do get spent on things that affect you. So healthcare is a big one. In Canada, we have like free healthcare. We do end up paying for it through our taxes, but you can go into the hospital whenever you need to, right? So without having to worry too much about how much that trip is going to cost. Okay. So Canadian pension plan. So pensions are for when you are done working. So you have worked for however many years and you're going to start collecting your pension. Now, CPP, everybody basically has to pay into. It's your Canada Pension Plan, and your contribution rate is 4.95% of any gross earnings above 3,500. So what this means is if you make less than 3,500, you don't have to contribute to your Canada Pension Plan. But anything you make after $3,500, you have to pay 4.95% of. Okay. So there's a couple steps for calculating CPP that you're not going to particularly like, but we're going to do. Okay, so recall in your math tracker, you have this chart. So the term monthly, semi-monthly, bi-weekly, and weekly and bi-weekly, and how many pay periods that is per year. So monthly, 12 pay periods, semi-monthly will be double that because you get paid twice a month, 24. Weekly, there's 52 weeks in a year. Bi-weekly is every 2 weeks, so half of 52 is 26, okay? Now, the calculations for doing CPP. First, you take that 3,500, you divide it by the number of pay periods per year, and that's the amount that's going to be exempt on every paycheck. So on every paycheck or pay period. So you do not have to calculate tax on that amount of money. It gets exempt because you don't have to pay up to $3,500 a year. So then after that, we can calculate our CPP. So we take our taxable income and we subtract that exempt amount that we got here. And we multiply that by our percent. But remember, whenever we have a percent, we change it to a decimal. So we'll multiply that by 0.0495. So it's kind of a 2, almost 3-step problem. And it's easy to set up like I have here. So we take our 3,500, we divide it by our number of pay periods. That is our exempt amount. Then we take our taxable income, subtract that exempt amount to get what will we get taxed on. And then we multiply that by our, oops, get rid of that percentage, please, by 0.0495. We've already changed it to a decimal, so there should be a percent there. And then that's our amount of money that we're paying for CPP. Okay, so doing this together. So calculate the amount of CPP deducted from each pay period. So our taxable income is $250 weekly. So our first step is to, well, let's figure out how many pay periods we have. So first step, how many pay periods? So weekly, 52 pay periods. Okay, so once we have that, we do our 3,500 divided by 52, and we end up getting 67.31. Now we make $250 weekly, so that's our taxable income is $250 weekly. Remember, taxable income, not gross income. So 250 subtract 67.31, and we end up getting 182.69. and that's the money that we get taxed on. So that's supposed to say that horrible mess there. So we get taxed on $182.69 instead of that whole $250 because we get to take off that exempt amount from the money we don't have to pay a year on every paycheck. Okay, so this is the money we're getting taxed on. So multiply by 0.0495, which is our CPP contribution amount, and we end up getting 9.043. And remember, context rounding, we need to round that to 2 decimal places for our money. So cutting off after the 4, take a peek over, 3 is below 5, so we get to round. We don't have to round up. So 904 we are giving to CPP. So $9.04 of our $250 weekly. Okay, so following this outline again. So first we need to figure out our pay periods. Next we figure out our taxable income, or not our taxable income. We subtract our taxable income, or subtract our whatever we got here from our taxable income. And then to get what we get taxed on, multiplied by 0.0495, which is our percentage as a decimal. Okay, so we have a taxable income of $3,750 monthly. So first step, monthly, how many pay periods will we have a year? So monthly, we will have 12 pay periods a year, because there's 12 months in a year. So same thing, we always start off taking that $3,500 that we don't have to pay a year and seeing how much will come off each paycheck. So $3,500 divided by 12. So I won't have to pay on $291.6666. Okay, but once again, whenever we have a number like this, we have to round. So this will be $291.67. Then we take what our taxable income is and we subtract this number from it to find out what we are actually going to get taxed on. So 3,750 minus 291.67. We get 3,208.33 is what we will get. We will use to find our CPP. So times 0.0495 to find our CPP contribution. And 158.8123. And remember rounding to 2 decimal places. So 158.81 will be our CPP contribution. Okay. Lastly, last example for this, I would like you to do by yourself. Okay, so give the video a pause and calculate how much CPP you will have to do or have to contribute if you get paid bi-weekly on a taxable income of $760. Okay, so pause the video right now. And you should get 30.96. So $30.96 gets paid to CPP. So remember 3,500 divided by 26. Get your answer. Take that answer, subtract it from your your taxable income to figure out how much you'll be charging CPP on. Multiply that by your 0.0495. Make sure you've rounded to 2 decimals, 30.96. Okay, so moving on. In order to find everything that is getting deducted off your paycheck, so your total deductions, you take your before tax deductions and you add your tax deductions, so what you pay in taxes, and those will be your total deductions. A little bit obvious, okay? So we need to know our total deductions if we're going to find our net pay. So your net pay will be the amount of money that you make after your taxes and all your deductions have been taken off. Remember, this is your take-home pay, what you actually get to take home. So your net pay, you take your gross income minus all of your deductions off of there to figure out what you're going to be taking home, right? So we have Albert. He has a gross income of $852 per week. So his gross income is $852. His before tax deductions include union dues of 2.5%. And he has a company pension plan of 3%. His federal tax rate is 16.2%. His provincial tax rate is just 5.4%, and he pays 4.95% to CPP and 1.8% for EI. And we have to calculate his net income. So we need to take all of our percentages, match them up to whichever they go to. So his gross income is $852 per week. Before tax deductions, union dues, 2.5%. So 2.5% as a decimal is 0.025. That company pension is 3%, so 0.03. Federal tax rate is 16.2, so 0.162. Provincial tax rate is 5.4, so 0.054, which is low. He pays 4.95% to the CPP, so 0.0495, which we were just dealing with. EI is 1.8%. Oops, so as a decimal, 0.018. And we are calculating net pay or net income. So remember, union dues and company pension will come off your gross income. So we use the gross dollar amount, the larger dollar amount. So our gross income of $852. Then we have to use this taxable income for our taxes, our CPP, and EI. So here's the decimal number we're using, and we will use our taxable income, which I'm just going to say is TI. So this will use taxable income, not gross income. CPP, we use the taxable income amount to calculate. Same thing with EI, we use the taxable income amount to calculate. So gross income, taxable income for all of these ones. So we need to figure out what our taxable income will be. So first off, in order to find our taxable income, if you remember our formula, it's going to be our gross pay minus whatever we had for before tax deductions. So minus our union dues and our company pension for this one. So those need to be taken off of our gross income to find our taxable income. So let's figure out how much we're going to be paying in union dues. So union dues will be our money times our percent is a decimal, so gross income. So 852 times 0.025. And we get $21.30. Our company pension will be our dollar amount times our percent is a decimal. So our dollar amount will be our gross income. So 852 times 0.03. You get $25.56. Okay, so there's our union dues, company pension. Our taxable income will be our gross income, which is 852, minus our union dues and company pension from that. So minus 2130 plus 2556. Oops. I'll just do two steps here. So inside your brackets. So 852 minus 2130 plus 2556. Add those two numbers together. We get 5086. So subtracting 5086 from 852, and we get 805.14. So this is our taxable income. So we use this number to figure out our federal tax, provincial tax, CPP contribution, and EI. So for our federal tax, same thing. It's going to be our money multiplied by that percentage. So our money is not our gross income this time, it's our taxable income. So 805.14. Multiplied by our percent as a decimal. So 0.162. And we get 130.43. And same thing with our provincial tax. So our money amount, which is our taxable income, 805.14 times 0.054, and we get 43.477, so on and so forth. So rounding to 2 decimal places, 43.48, right? It's got around that 7 up. I'm going to skip CPP. I'm going to do that one last. EI follows the same steps as your federal and provincial tax. You take your dollar amount, so your taxable income. So 805.14 times your decimal as a percent, or your percent as a decimal, so 0.018. Geez, hardy. And we get 14.4925. So don't have to round that up, that last cent up. So 14.49. You're going to be tempted to round that up to 50 cents, but keep it as 0.49, guys. Now remember, calculating CPP, we have those 3 steps. So our first step is to figure out how many pay periods we have in a year. So back up to our question, Albert gets this much per week. Okay, so that's our number of pay. That'll tell us our number of pay periods. So per week, getting paid weekly, 52 weeks in a year, so number of pay periods is 52. So it gets paid weekly, so 52 pay periods a year. Now once we have that 52, we have to take that 3,500 that we get exempt. We divide that by 52 to get 67.3076, rounding that number, 67.31. And remember our next step, we take that money amount, so our taxable income, not our gross income, so 805.14. Subtracting 67.31 from that to get 737.84. And then we take that number and multiply that by 0.0495. And I'm kind of running out of room, so below. So 36.523, so on and so forth, rounding to the nearest cent. We will be paying 36.52 to CPP. Okay. Now, notice how I have boxed all of my deductions. I did not box the 805.14 because that does not get deducted. Remember, I find my taxable income, even though I had to calculate it, I found my taxable income to find out what my federal tax, provincial tax, CPP, and EI would be. So all the things that are getting deducted off my paycheck are my union dues, company pension, federal tax, provincial tax, CPP, and EI. So all the things that I have boxed here. Taxable income does not come off, even though it was something you calculated. You needed to calculate it to figure out these ones. Okay, so finding our net income is going to be our gross income minus our deductions. Sorry, after I have too much ink on a page, it is really hard to write. It's really slow. Okay, so gross minus deductions is what that says. All right, so our gross income was $852 per week, and let's calculate our deductions. So let's add up all of these numbers to figure out how much our deductions were. So our deductions, when you add all of those up, you get $271.78. So altogether in your deductions. Okay, so your union dues, your pension plan, federal tax, provincial tax, CPP, and EI, altogether will end up costing you $271.78. So our gross income, remember, is $852. So $852 minus our total deductions. So minus that $271.78 of all our deductions added up. We get $580. $22 is what we get to take home. So this is our take-home pay, or our net income, which if you did your percent deductions calculation, so take your $271.78 divided by 852, or not, yeah, would be about 32%. So 32% goes to deductions. That's not part of the question, but just so you know, that's a pretty average number for how much you will be getting off of your paycheck, off of your gross income. Okay, so for your next example, I want you to do it by yourself. So pause this. I will do the work here. We'll go through really quickly to make sure you have the right answers, and you can check your work if you don't have the right answer. And then that's the end of our notes. Okay, so give the video a pause, and then I'll unpause and we'll go through. So pause. Okay, so here's our work. For union use, you should get 3301. Health benefits, you should get 5658. You should get a taxable income of 853.41. Federal tax, you should get 123.74. Provincial tax, you should get 5462. CPP, with your correct calculations, you should be getting 3891. EI, you should be getting 1365. All for an amount of deductions of $320.51 to give you a net income of $622.49. Remember, don't add that taxable income into your deductions. That doesn't get deducted off. You just use that to figure out 4 things. Okay, so of your $943 that you make gross, you get to take home $622.49 of that, which is about 34% of your income going to deductions. Okay, so I would suggest before you start on your assignment, make sure that you get these formulas that we boxed into your math tracker. So, your net pay is your gross minus total deductions, your steps for doing your CPP. Okay, make sure that gets in there. Even though you have this formula, this might be useful to have in there as well. How you calculate your taxable income, how you calculate your tax deductions. So keeping in mind tax deductions, remember you use your taxable income. So for your federal, provincial, EI, and CPP, put a note that you use taxable income. And for your pension plan, or your group life insurance, disability insurance, all of that, you use your gross income. Okay, and you can get started. Sorry for the long notes, you guys.